All right, good morning, active traders, and welcome to Trading Week Ahead. I'm Ken Calhoun, your humble host, coming at you live here from Colorado on Saturday, April 23rd, 2022. What a drop in the markets, right? We've got quite the sell-off lately, and one of the things that you want to do is figure out how to make money with it, right? So one of the things we always pay attention to is our VIX, our volatility index. And if we take a look at that, I'm going to get this mouse working properly. Okay, put that over there. All right, well, good morning. Now, let's take a look at our VIX. We've had two big red days here. Obviously, a bearish engulfment on this pivot right there. And you can see that the VIX has done a really big spike. Now, if you good folks remember, last week I mentioned it would be a good idea to go short the market when the VIX gets over 20, right? Especially 22, 21, 22, right over that yellow line, which is the 200 simple moving average, right? This is our volatility index, the fear gauge, dun, 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 dun. The key is making money with it. So what we're looking for is increasing volatility. Now, many of you have done extremely well in my live room, and congratulations. The counterintuitive part of the market is frequently good opportunities are there when you don't see them early enough to capitalize on them. So that's one reason why it makes sense to be in the live room. For example, UVXY. Who can tell me that candlestick pattern? And be sure to learn candles exclusively from Steve Nissen at candlecharts.com because, hey, they work. What's that pattern? Who can tell me? What's that pattern? You've got a large green body, well, a large candle wrapped around a smaller previous candle after a downtrend. That's called not a morning star. What is that? Right, Mira. Yeah, Mira got it. Of course, Mira got it. Bullish engulfing, right? Right, Heidi. Good point. Right, Phil. Yeah, that's a bullish engulfment. That's why I put on over 1,000 shares the day before yesterday, right? Starting the day before yesterday, scaled in yesterday on that. So anyway, that's a bullish engulfing, and we have a month high volume coming into UVXY. Now, I'm all about UVXY, but because it trades like this. Now, how much money could you have made had you traded that correctly, right? I called the long frame members at 1140. Now, the point is there is, for both swing and day trades, the point is it's very counterintuitive because it was looking really terrible right here about now. And I could tell my traders were wondering, why was I calling it long when it was down here? And I said, if it gets over 1140, go for it. The reason is the VIX ETFs or ETNs are almost always a good buy at right near a 52-week low. This instrument's 52-week low is 1116. And so it's getting really, really close to the 52-week low. Any pivot off the 52-week low is a strong buy. I've been trading this instrument and ones like it for over 15 years now. So I knew that pattern. The goal is to trade patterns that repeat, right? Now, even as the talking heads are talking about doom and gloom, how many talking heads are telling you about this instrument? They're not on your side. They're on Wall Street's side. They're on the advertiser side. They're not on how to make you money side, right? That's where I come in. My goal is not just to entertain and inform, but to actually genuinely teach you how the frick to trade in this current market, right? None of the talking heads are talking about things that skyrocketed up the last 2 days. They're all talking about, well, what should we buy now? Let's figure out. Let's see, stocks that have sold down, 80% off their highs, or avoid stocks with high multiples. Trade stocks with dividends. No, that's stupid. When the stock market goes down, you sell stocks or get rid of what you got left. When the market goes down, you buy things that go up inversely. Good question, Wendy. Yeah, we'll see what strategies are available to us when we look at these instruments. Now, one of the things that we look at too is other ETFs, right? I like UVXY. I also trade SQs. Very similar pattern, and I've so many smart traders. One guy was talking about SOXS, the short semiconductor, right? Another great chart. There's also TWM, The point is there's many ways to capitalize on a bear market, and the right way to learn how to do that is with me exclusively in the live room at Trading the Open. If you're not yet a live room member, you might want to consider joining. We're at a perfect time to learn from me because I'm an expert in trading these things. I've traded millions and millions and millions of dollars worth of order flow of inverse ETFs that go up when the market goes down. I'm the industry's, to the best of my knowledge, I'm the top educator with tax return proof that I actually do trade these things daily. And so anyway, you may want to join the live trading room, and there you'll get specific entries, when to get in, when to get out, step-by-step watch list of exactly what's worth trading and how to capitalize on it. So that's at trademastery.com/live. And back to our regular presentation. Now the trick is how to know when to scale in, when to build a trade and when to scale out. Now, odds are next week is going to be choppy market. We may well get a gap down on Monday, but the markets may bounce up a little bit. We have no idea. The goal is to use your risk management and your position sizing to make as much money as you can. So I'm in, for example, I'm in this one over 1,200 shares into the weekend. Now, if it goes down a point, I'll be down $1,200. If it goes up a point, I'll be up $1,200. I made over I think it was 1,353. I was up not a lot, but $1,300 yesterday in just one of my accounts. So one of the things you're looking at is how to capitalize on moves as they're there. And so let's take a look at some of these other charts. Let's look at your goal for now should be to put together a swing trading strategy in the inverse instruments that's designed to make as much money as possible if the market continues to sell off, which it probably will. The trick is it's not going to be a straight line down. It was easy. This was so easy to trade the last 2 days. I mean, hopefully you guys made lots of money trading instruments like this the last 2 days. It's really easy. Straight lines up, continuous, no big pullbacks, no difficulty. Now, if we look at our daily chart, now, just because something's cheap doesn't mean it's something you should buy. Here's PayPal. Who among you would buy PayPal? I wouldn't unless it gets back over 100, right? If you should have a bounce, a pivot strategy in mind. But for example, what if somebody had bought Netflix at like 300 or 400? Well, their money got cut in half. Now it's 200. Or what if they bought it 700? Now it's 200. So you can get in a lot of trouble if you try and catch bottoms and listen to the talking heads on TV because they're not traders. They're talking heads on TV that get compensated by the network. Us traders, we've got to make our money from our trade. So you got to figure out the way that makes sense, right? So when we take a look at some of these charts, one thing I want you to stay away from is charts that look like they're oversold trying to bounce, because unless you got a broad market support, unless there's breadth and depth, you're just gambling. If you're trying to take shots at some of these that have sold down and look to bounce, even in regularly strong sectors like Occidental Petroleum's been a favorite for a long time. But what's the chart pattern up here? Hint, it's the exact opposite of UVXY. What did that signal tell you to do, and did you listen to it, any of you who are trading Occidental Petroleum? It's a great company and a great stock until it's not. You're right, Heidi. Yeah, it's a bearish engulfing. Bearish engulfing. So Amir got it. So the ladies got it. Congratulations. So that's a bearish engulfing, and it told you to sell, sell, sell on a loss of that engulfing candle low, right? Which is right there near 58-ish. So good trades are good until they're not. And one thing that I think I can help you with, especially as part of the live trading room, is giving you kind of coaching. And I'll say things like sell, 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 take the money and run. I give you specific entries and exits to practice with in a demo account for educational use only, but you're able to follow along with me and hopefully get a better sense of timing and not have to do split-second timing. It's not like video game hotkey. I don't day trade like that. I do as many as 100 and maybe 108, 110 day trades daily, usually in the 50 to 70 trade round trips a day range. So I'm very active, but I'm relatively leisurely about it. So you have to have a plan, or if you're swing trading, you have to know exactly, or roughly I should say, when to get in and when to get out. And you have to have the discipline to get out. Now, one thing that I think can help you become a better trader, one thing that can help improve your trading skills is to get out at the first sign of trouble, or at least start to, what I'll do is I'll sell half of a position if I see a contrary signal. If I'm in something that's going up and I start to see a pullback or reversal that concerns me, I'll often sell half the open position just to bank a small profit. And then if it keeps going down, I'll sell out the rest. So my point is, you don't need to do all or nothing trades, nor should you. You should scale in and scale out and make it a more thoughtful process. Let's take a look at these. Now, for example, because of the recent sell-off, I have absolutely less than no interest in trading any stocks, except for intraday trades. Now, if we do day trades, we like charts with relative strength. We didn't see much the last couple of days though, right? Okay, there's one, Bed Bath & Beyond. I think they had some good news. Now this illustrates the idea that, odds are you didn't see this run up in time to catch it or anything. If you have a stock that or an ETF that you're considering trading, what I like to advocate using is one triggers the other orders. They're called OTO, or one triggers the other. So what that does for you is you put in the order, it automatically fills. Let's say you wanted to buy this over 17. And let's say you had that order pending, but you weren't in front of the monitors, but you still had that order live in your account. Well, you would have got filled and hopefully made some money with it without even hands-free trading, right? Not even being in front of the monitor. And it automates, because once you put on the trade, it automatically, you set your trailing or your hard stop or wherever you want so that you protect your downside. So if you had like a 20 or 30 cent trail stop, it would have gone up. Looks like it got halted, ran up again. You'd be out on the move to the upside, okay? So the point is, learning a little more sophisticated order management strategies can be a big benefit to you. Now, things that are going down, we don't want to buy. Even if they do start to show some signs of life, I think it's much smarter to early on focus on the charts that have best relative strength. Now, one example of a commodity stock that I've been talking about here and in the live room is both SCO, the short crude oil, and the KOLD, which is the short natural gas. Both look really good on the 2-day charts, right? This is KOLD. I bought some after the market yesterday afternoon, just a couple hundred shares to get started. I don't start off my trades with 1,000 or 2,000 shares, because that can really rapidly cost you money when it's wrong. So you start off small and scale in. Good to hear it. So this is a nice move to the upside. What do I think about Dash? I'll pull up Trader Choice charts in just a minute. Anyway, two that I really like right now are KOLD and SCO. That's short crude and short natural gas. And if you take a look at the commodity plays there, they've come down very far. What do you notice about the color of the days, the last 5 trading sessions in the short crude oil ETF? This is how you short crude. All 5 days are green, and they're trending up just a little bit. Okay, so if I can double my money buying at 5 and selling at near 10, that's a good thing, right? When it comes to commodities, you want to play the extremes, whether you're playing gold or oil or natural gas, right? Here's a KOLD ETF. Again, this has 4 out of the last 5 days are green on big green volume. Another thing visually to pay attention to is to make sure that your trade, especially when swing trading, it's vitally important that you make sure that you are supported by the street, meaning you've got large green volume bars as well as price. You want both price and volume to be increasing when you put on your trade for a swing trade. And this looks like an oversold, looks like it wants to bounce in KOLD. So I'm long this. I'm also long SCO. I'm also long UVXY because I want to play volatility in this market. Right? If you take a look at where it came from, If we look at where it came from, well, it's hard to see on this chart. It came from much higher. Now we're seeing a multi-week high in UVXY as of yesterday, right? We took out like a month, almost a month worth of price action to the upside, and it's climbing above 2 of the 3 moving average lines. So it's still speculative long, but I'm putting some size on right now because the tremendous upside in this instrument. Another thing that I like to zoom in on the charts with my traders for intraday is, hey William, how long do I hold UVXY? Well, I'm in and out. I have multiple accounts. If you're like me, you want to both swing and day trade. I keep shares in my swing trading account, and then I also day trade in my day trading account. So I keep kind of parallel path. I have something I want to hold swing trading, I purchase in my swing trading account and just leave it alone, with a trailing stop. For the day trades, I'm in and out of those, dozens of times daily. Now, one tool that can really help you is to configure your charts like this so that you can see minute by minute price action. And in the live room, we meet from 3:30 to 4 as well as from 8:30 till 11 most days, right? So we're there 5 days a week, and we're there from 8:30 till 11, so you get plenty of coverage. And we're there an hour before the market opens, so we can carefully look at the charts and develop a trading plan for the upcoming session. Now, during the afternoon from 3:30 to 4, as well, we would like to use very good close-up charts so we can see minute by minute where the price action is. So that's a good way to visually eyeball the chart. Yeah, this is what I wanted to share with you. That's 2 years, and that's 1 year. So there's a tremendous amount of upside, and we're definitely not too late to the party. Anything under 15 is a bargain. Well, we're over 15, but I was telling my traders, and you guys too here, right? Over the last month or so, 2 months, I've been telling you folks the UVXY anywhere under 15 is a good deal. It finally proved me right, and we're over 15, and it can very easily get back up to a high multiple, right? Just like when I was trading TVIX, I bought 56 and sold 940. So there's lots of room to the upside if the market drops. Okay, what else? Rules of engagement. One thing that really helps is to look for upcoming charts that have relative strength on a continuous basis. Trying to get the intraday chart up here. Now this chart pattern illustrates a perfect 45-degree angle followed by 45-degree angle day. That's a very rare and very strong pattern. You almost never see it. I was expecting this to stall and drop at 14. I did not expect to run to 15.5. I thought 14 would be it. Usually after a nice strong day, which the Thursday was especially strong, going up over $2 just continuously all day long, normally you get half the range, kind of like the opposite of a mean reversion. You get a 50% extension to the upside. So I was expecting it to stall, which it did here, and I sold here, but then I rebought back into the close. Let's see some questions for, let's see, how do I find targets on daily charts? Well, it's all just looking at things like the previous support and resistance, the price elasticity, how far it's ran. But the main thing, how to say, there's a lot to learn in trading the VIX instruments, and they're very advanced. And one thing that you want to do is kind of keep it simple by also trading other instruments as well, like SQQQ, right? Now, one pattern that I like to trade is trade one against the other. Often, well, I should say virtually all the time, when UVXY goes up, SOXL goes down, or in a bullish market time, when the market's going up to new highs, and so is SOXL, our UVXY will be traveling the opposite direction. Let's take a look here. We're going to wrap up in just a minute. Let's see, standard chart. Let's look at a few. Wow, big turnout today. Hey, welcome aboard, everybody. Good to see you. Wow, it's like a a recent record. So good to see a lot of people here. I'm the guy who really trades. With tax return proof, he really trades. Now, one of the quick rules for, I'll give you this one. This is the type of training that my live room members get. With our VIX instruments, especially UVXY, you never sell the gap down and you never buy the gap up. And it's the exact opposite of stocks, right? Usually stocks are looking for gap runners, right? Gap ups that continue on up for longs. And if we have something that gap down that we're in, say overnight, and starts to go down, you sell it. Well, it's the exact opposite with UVXY, and this was it. I was talking all morning long. I was telling my traders this one's going to light up. For those of you who are there with me on Thursday morning before the bell, you saw how correct I was, right? It was going down, and I was telling everybody, put together a game plan to get in long because this is getting near the 52-week low, and it's a gap down. And you always, or virtually always, buy the gap down because it goes up, and you sell the gap up when it goes down. That's another quick tip for all of you who do trade, not only this, but other instruments for swing trades. If it gaps up in your favor, like let's say it gaps up to 1650 or 17 or whatever on Monday, that'd be great. And then it starts to roll over, sell it all. And then rebuy if it takes out new highs later. So let's say it gaps up to, let's say 1650. That's not out of the realm of possibility. So let's say it gaps to 16. It's unlikely, but let's say it gaps up almost a full point to 16.5. And then it starts to go down. Where would you guys sell it? This is an audience interaction portion of this morning's event. Johnny, tell them what they won. If this gaps up to 165, and I'm in deep, I'm over 1,200 shares, something like 12, 1,300. I'm in over 1,000 shares in this in the weekend. So I'm hoping it'll gap up, right? I'm up over 1,300 yesterday, so I'm playing with Alice's money. But let's say it gaps up to 1,650, and then it makes a bearish cup or a descending triangle, or otherwise misbehaves and starts to go down. Are you A, going to just ignore it and hope it goes back up again, or are you going to lock in profit? I've never met a profit I didn't like. So my goal is, it gaps up in my favor, I'm going to take the money and run because I want to get paid. I'm saying, wow, a lot of them, 1630, 16, 16 and a quarter, 1550, lock in profit, right? If it gaps to 1650 and you're in 1,000 shares, you're not going to give more than 20 cents to the market, are you? 1630 at the lowest. If I'm in at the, I'm like 12, 1,300 shares, something like that. I'm in 700 shares in my day trading account alone. I think I'm in another 5, 6 in the other account, the swing trade account. So if it gaps up to 1650 and starts to roll down to like 1630, I'm out. I'm taking all the money out. I'll probably sell like 1,000 at the 1630 and the remaining few hundred at 1620 or 1610. So I'm not gonna give back profit because that's hundreds of dollars for every single 10-cent increment. So my message is, my point is, look at a gap in your favor as a swing trader as a gift. And if it gaps up and then it starts to roll down even 20 cents or so, that's a good reason to get out because you're gonna lock in a profit, right? The market's giving you a profit. The market will take it away from you if you screw up and sit around and it comes back down to where it closed yesterday. That would be, I've been there, done that, gotten frustrated with that. So what I learned the hard way is you sell it on the first sign of trouble, or at least start selling it, you know, maybe leg out of it a third or half the position at 20, 30 cents drop. And then, but be sure that you get back in if it takes out new highs. So let's say it goes 1650 to 1630. Let's say I sell it 1630 and 20, I'm out of the entire position. I will rebuy if it breaks out over the 1650, say up at 1660 or above. So I lock in the profit on the overnight hold. It starts to pull down. I take the cash because often it'll drop back down to support or even go lower. And that would be a really disappointing thing if you're up to like 1,500 bucks in the morning, and then because you sat around till 9:30 and didn't sell it in the pre-market on the drop, you're back at flat. That's no good. So I get back in at new highs. So anyway, good stuff. All right, what else? I know the point was this is going down, 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 down. And I even told my traders Thursday morning, if you were there, you remember, I said, when it looks terrible, it looks awful, especially after a gap down to a 52-week low, that's a buy signal. And it was. boom. But it's all because the experience of knowing the pattern. So that can help. Now, where does that put us next week? What are we going to do? Now, unlike UVXY, KOLD had been building a nice, what I call an acceleration ramp. That's where you have a steady uptrend that then makes like a check mark or hockey sticks up like it did yesterday. So KOLD, our natural gas inverse, looks really good for a swing. And short crude oil also looks good. It's not yet over that 535, 540, but SCO, I'm looking to scale in. I'm already in, but I'm going to scale in substantially if it gets over 5.5. So a question about what's fair long-term value for UVXY? Well, it's a contango futures derived worthless instrument. It has no intrinsic value whatsoever. But I just made $1,300 yesterday because I'm a trader, right? Wrong question. Investors will ask things like, what's the PE ratio and the long fair term value? And it's a trader's instrument. It's not a investor's instrument. You want to invest, you get yourself some Costco, some Disney, some maybe Disney, Johnson and Johnson, Eli Lilly, Apple, maybe some reputable companies. But for traders, we love these kind of instruments because they ran 11 to 15 in just 48 hours. So that's what I like to trade. Yeah, good point, Brian, on the B band. Ernest, scaling in on day or swing trades? Which question from a trader? Could I spend a few seconds on how I scale in? Very frequently, that's the answer. But yeah, sure, I can share them. For day trades or swing trades, Ernest? Day trades, okay. Well, let's tighten this chart back down. The way that I trade, very aggressively. So let's go to my tool, which is the 2-day chart. The way that I scale, I was at 1,900 shares at one point yesterday in this, but only 300 or 400 shares at a time. The way that I'll do that is I'll put in what I call a sequence or a ladder of entries of say 300 or 400 shares. Lately, I've been doing 400 shares. I'll probably move up to 500 shares next week. But you put in a sequence of trades above, say, a whole number on a breakout, every 15 or at most 20 cents apart. This one I was trading as tight as a dime apart, like the 13, 45, 55, 65. But the point is you put in a sequence of orders, I would say every 20 cents or so. So let's say you buy 300 at 13.20. Then you buy another 300 at 13.40, then 13.60, then 13.80. Then you expect it's all going to stall out its whole number at the 14. And at that point, so what I do is I put in building blocks. I will scale in like Darvis boxes, little micro boxes. I'll put on bullets. I call them bullets. I'll put on 300 or 400 shares at a time. And as it moves up, it builds the position. And I still keep a hard stop down at support. And then once it moves to a place where it looks like it's going to roll over, if I see 2 or 3 red candles, or the whole market looks like it's going to pivot and this guy's going to start going back down, I then, like I did here near 14, I tighten up trailing stops at the first sign of trouble. So that way you build a rack of trades that slowly, carefully builds your position size and use either trailing or hard stops. And so often near peaks in this, I'm often up at 1,600, near 2,000 shares, but I've only bought 300 or 400 shares, or even 200 shares at a time on its way up. And then at the first sign of trouble, maybe the second sign of trouble, I tighten up the trailing stops. And that way, now, a quick caveat too, or quick note is that the last, say I'll do like 5 positions. I'll put a sequence of 5 trades. Always the last 1 or 2 will by definition be a stop because I'll be buying the high. But I've already built up so much equity from the underlying lower positions. I'm well in the green. I may be up $800,000 and I get back 150 or 200 on the last 1 or 2 that by definition are stops. They pull back. But the money that's in the money from the earlier positions puts me well ahead of the game. So that's the goal. So that's a quick tip on position sizing. Hey Tony, I say I can't find a single click buy and sell method in Fidelity. Yeah, you're right. I wish there was. It's a pain in the ass. I use the Active Trader Pro OTO conditional order window. That's my bread and butter. So it's the OTO and have to manually, pull down and pick it's a real pain in the ass when you're doing up to 110 trades daily. So it's a lot of work. I wish there was a one click. I've been asking them for that, but it's no, it's not as easy as interactive brokers. Yeah, IB is a much better active trader platform, but I get free commissions with Fidelity, and I still get instant fills. So I don't mind doing the legwork to save tens of thousands of dollars in commissions each year. But yeah, you're right. That would be great if there's a single click. How do I have time to do all that trailing in more than one account? Well, for day trading, I'm just doing it within the main day trading account. Oh, thanks. Let's see. Scott's saying active trader works great on Thinkorswim. Good to know. I haven't tried TOS, but it's a reputable platform. All right. Well, thanks everybody for being here. I appreciate it. We're going to wrap up on time. Do be sure to give me a chance at the live room if you want to get specific entries and exits. And here you can see, well, some screen caps of UVXY and SQs. I think those are from Thursday. P&L proof, I did over $41 million worth of real money trades in my Fidelity account last year. Okay, I don't know any other educator that does that much trading. I don't know any educator that even shows tax return proof. Be sure that you do not waste your money on people that can't prove with a tax return 1099 or whatever from last year that they're real traders. Most of those guys are internet marketers posing as traders. They copy guys like me who are real traders, but they can't teach you because they're not real traders. Only learn from people. How many of you would agree with that statement? And we're going to wrap up with that. How many of you would agree with the statement that you should only learn from people that have tax return proof that they're real traders? I mean, that's kind of a low bar. It should be a battle of the net P&L, the 5498s between us educators. But I'm trying to get the industry to just show that you are a trader. Prove that you do trade, at least a little bit. You don't have to do 41 mil, but yeah, I agree. No fake traders. Agree. There's a lot of ripoffs out there. Yes, right. Yeah, well, scrolling by, thanks. Yeah. So I would suggest that you might want to consider only learning from people who are authentic and prove it with tax return proof. That's the only place you see if the person's the real deal. It's tax return proof, right? That is my actual. I blocked out my social security number and account number for security, of course, but that's my Fidelity 41 mil worth of action. So at a minimum, that should give you some comfort that I put in a lot of hours doing tens of millions of dollars worth of real money trades last year alone, right? Not to mention the other 21 years I've been trading back since the late 90s. So only learn from people who can show you tax return proof that they're real traders. Because if they're not sure, if they they talk the talk, but they can't walk the walk with tax return proof, they're likely phonies who are just pretending to be traders. You probably have more experience than a lot of, it's a sad truth, but God's honest truth. I swear to God, you folks out there listening, many of you probably have a lot more experience with real money trades than other educators that you pay attention to. Because a lot of those guys are just internet marketers that do webinars or whatnot, but they don't really trade. So make sure that the people you learn from are what they say to be, and just ask for any documentation that shows proof. Hey, thanks. I appreciate that, Scott. All right. Well, you folks do take care. And now, how to say, it would not be surprising to me if we get a relief rally bounce on Monday and all the inverse instruments look terrible and they've all dropped down to 50%. That would be an exit. That would be worst case expectation is. Say this guy gaps down to 13 on Monday. It's a relief rally on Wall Street because clearly the market was oversold. So it's no, the market was not oversold. The market's still going to go down. We got 40-year high inflation, stupid people in the White House, all kinds of bad problems in the world. Supply chain issues and blah, 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 blah. If you've seen the evening news, I have no reason to expect the market's going to suddenly bounce and rally and sustain a rally. We may get a midweek bounce or so, a short covering bounce, but big picture, you want to start figuring out how to leverage into your instruments to go up when the market goes down without the risk of shorting things. I do not short overnight, especially because what if you short a stock and the company gets a buyout offer and then wipes out your whole trading account and then some? So I don't like to short overnight. But I go long in inverse instruments overnight all the time. Good to hear it, Steve. Yeah, Harry's a good guy. And I agree with you guys' point. So anyway, try out the live room. You have my word. I'm there to help. I will answer your questions. I'm respectful. I'm compassionate. I'm understanding. I've made every screw up in the book and then some. So I speak from a lot of experience of failed trades as well as winning trades. And the difference between the two, explained hopefully very clearly and very specifically step by step, is what I offer in addition to answers to the questions. And of course, in my live room, let's see if I still have this up. Yeah, we have that was my call for UVXY yesterday, was 1345. My members get this, what I call an answer key. I thought it was kind of a clever title. I even made a little graphic up there, but anyway, I do make calls for the instruments with specific entries provided before the 9:30 opening bell and then updated in market. So for example, yesterday I said for all my traders to go long at 1345. Now you do the math. How much money could you have made had you listened to my 1345 and held for any length of time? It only ran up $2 from there. So anyway, that's the kind of benefit that my members get in my Trading Open Room. So best wishes and have a great weekend ahead. And I will see you guys hopefully in the room on Monday. Trade smart. And if I don't see you in the room, I'll see you next Saturday. So take care and bye for now. Goodbye.